Welcome back in business. The Monetary Policy Committee, MPC of the Central Bank of Nigeria, CBN, have begun a two-day meeting that will determine the country's key lending rates for the next few months. At the last meeting in November, the Apex Bank raised the interest rate from 15.1% to 16.5% to tame rising inflation. Last week, the Consumer Price Index, which measures the rate of change in prices of goods and services, eased to 21.34% in December 2022, down from 21.47% in the previous month. What then is a possible outcome of the MPC meeting? Johnson Chukwu, the CEO, Carry Asset Management Limited, joins me now. As always, thank you very much for joining us. Now, what is the possible outcome of the rates considering Nigeria's current inflation and other parameters?
Let me start by thanking you for having me. My take is that the MPC will hold rates at current levels. You did mention some of these factors that will drive or will influence their decision, one of which is that inflation rate has moderated from 21.47% to 21.34%. Yes, a marginal decline. And then we've also seen that at the productivity level, we've seen also a decline in GDP growth rate between the second quarter and third quarter of last year, from 3.54% in the second quarter to 2.25% in the third quarter. So those are major factors that will drive the decision of the MPC. And my take is that, given that they wouldn't want to take any measure that will reverse the moderation we saw in interest rates, that means they will not loosen. Also, given that we also witness a sharp decline in economic activities, they're not likely to go to tighten further. So any tightening now at this point could tip the economy negatively. Any loosening will also reverse whatever gains that have been made in terms of moderation in inflation rates. So my take is that they will keep rates at current levels.
So if the MPC maintains a policy stance, what will be the implication on the economy?
Well, for economic operators, what we're going to be dealing with is that we're going to be dealing with current high interest rate environment. Of course, we've already seen an elevated interest rate environment in the past couple of months as a result of over 500% increase in MPC, about 500% increase in MPC rate. MPR rate from 11.5% when it started increase in May to 16.5% as of November last year. So we've also seen a 500% increase in cash reserve ratio from 27.5% to 32.5%. These factors have contracted available liquidity to the real sector of the economy, has led an uptick in interest rates. So if they keep rates at current levels, it then means economic operators will continue to deal with high interest rate environment. But the most important thing is that we wouldn't want this situation to worsen by the increased rate, and we're going to deal with higher interest rates.
Well, indeed, Johnson Chukwu, the CEO, Carry Asset Management Limited, thank you very much for your contribution. And would have to wait for what the CBN governor would announce tomorrow after the end of the MPC meeting. But thank you very much, as always, for your time and your contribution.